Also in LA.
Oh
I share your
wow,
opinion about Barcelona, though.
it's quite a nice city. It's one of the best I've ever been, and it looks like we are live. So it's time to stop talking about Barcelona, guys. If this is your first time, welcome to the Startup Tank. I'm your host Matt Ward, and I should probably have the microphone in the right place. This is the show where we get the world's top climate tech founders and investors on. Think Shark Tank, Dragon's Den for climate companies. You're not too far off. Every other Monday, so twice a month, we bring on 5 to 6 pre-seed to pre-series A climate companies alongside 2 to 4 climate tech VCs, the shark, so to speak. They'll get 4 minutes to 5 minutes, sorry, a little extra time, 5 minutes to pitch the companies, share what they're doing, and then we'll have a brief Q&A diving deeper into the companies. If you're watching and interested, none of this is a solicitation, all the financial regulations, yada, yada, et cetera, et cetera. Have good, solid due diligence with investments you make, risky, et cetera, et cetera. I'm your host, Matt Ward. I run 4WARD.VC and our partner in Clime, Accelerator. If you're interested in getting a startup investor who's really hardcore on board with you, think in the grind, going day to day, helping you land customers, clients, pilots, et cetera, from our pretty solid network at this point. I would say probably one of the larger in the climate and clean tech. You can learn more about us at 4WARD.VC. We've also got a climate VC database, which you can see here somewhere on the side. 900 plus funds, incubators, accelerators, and CVCs who focus on climate and clean tech. 4WARD.VC/VC database. It's the number 4WARD.VC. We invest in companies that move the world forward. So check us out there. And if you want to apply for an upcoming session of the Startup Tank, be sure to do that. It's just startuptank.com, as well as the other communities that we've got on there to connect with, something like 3,000 to 13,000, depending on how you measure it, climate techies, just at 4WARD.VC/techies. But today, I'm not the focus by any means. The companies are the focus. But before we hand things over to the companies and get into the pitch session, I want to welcome Zheng with Orca to the program. He's going to be helping with the panel, so to speak, of judging the companies. D, would love for you to introduce yourself, share a little bit more about you and Orca Fund so that the companies and listeners know kind of what they're getting into.
Absolutely. Thanks for having me here, Matt. So the Orca Climate Fund is a fund that invests in pre-seed and seed stage climate tech companies, primarily pre-seed. I would say it's somewhere between a 80-20 mix to a 60-40 mix. When it comes to pre-seed and seed. We're sector agnostic, but we're fairly rigorous in terms of impact, where we follow a matrix of SDG goals and in terms of decarbonization and water use. Our background in terms of the board is kind of interesting. My own background comes from, I'm a former hard tech founder in energy and industry. I have about 20 years of experience in both industrial decarbonization and as well as petrochemicals. But we have an interesting board of marine biologists and consumer goods experts within the fund. So we're kind of welcome to all entrepreneurs from all sectors to present their ideas to change the world.
And for us, thank you for sharing that, T. For us with 4WARD, we're focused very much on climate sustainability. If you want to apply, learn more about our Climate Tech Accelerator, or just to join into our community, again, 4WARD.VC. And today we're joined by 6 awesome founders. I think 6, it always depends with founders. They're always busy. Something comes up. There's an LP or a VC call, or you've got to get the hardware done. But we're joined by 5 to 6, depending on who hops in. Incredible founders. They'll get 5 minutes to pitch. And at the end of the night, D and I have to decide somehow on a consensus who's the most awesome, who is the startup of the night, the one we're most interested in, most would want to set up a meeting with. So to kick things off, Miguel, how about got an intro to Miguel from Matthias with Replace Energy. They're doing incredible stuff there and have gone through the program, and very excited about what nTreaser is doing as well to transform the world of renewable energy and make it a bit more transparent and speedy, so to speak. You want to take things over, Miguel, share what you guys are doing? Let me know when you're ready for that 5 minutes on the clock.
Wonderful. Give me 1 second. Hello, everyone. Good afternoon, good morning. Depends where you're based right now. Let me just get the PowerPoint operating. Give me 1 second. because this is not the download version. So let me get it for download, and then we'll be off. Perfect. So can everybody see the presentation okay?
One sec, we're still a black screen.
Still black screen. Give me 1 second in that case. Give me 1 second. Start sharing. There we go. Can you see it now?
Awesome. Looking good. Your
Marvelous.
5 minutes starts now. Take it away.
Thank you so much. Well, good morning, good afternoon, everyone, depending on your base. My name is Miguel Galatas, and I'm the co-founder of nTreaser, which is a platform to help connect developers and investors of renewable energy and renewable assets. We're based in Madrid, Spain, and we're going to tell you a bit about what we do. So we all know that the renewable energy sector is a great market. There's a huge opportunity for investment, and there's a lot of investment that is occurring on developing more solutions in wind energy, photovoltaic storage, hydrogen, and other clean energy solutions. And we expect that there's going to be around 10 billion of investment up to 2030 due to, us needing to meet our 2030 net zero goals. There'll be a huge upscale of investment that we've already been seeing, but we think it's going to be accelerating rapidly. The problem with making this investment is that the industry is not very transparent. There's a lot of different stakeholders in the development of a renewable energy project, and the market is very fragmented with a lot of players, with a lot of intermediaries that really slow down all the process of getting investments and making transactions more efficient and useful. And that this makes the transaction slower and a lot more inefficient. As you can see here, this is a good diagram that shows the industry and how a renewable asset project is developed, especially in the utility scale, with the different parts, the engineering, the construction, the advisors, the investors. And as you see in this not very number based, very imagination based diagram, there's a lot of intermediaries, a lot of people who really block and make the transaction slower. So what we're trying to do in nTreaser is create a single space, a centralized platform that connects and standardizes all renewable transactions. This allows for the projects to be developed quicker and for all the different stakeholders to be able to meet in one place and really start the conversation, develop the projects, sell the projects, and even begin the co-development if that's the way to move forward. How we picture, or our focus currently, is to really focus on the first part of the transaction of connecting the developers, the people who get the permits, the people who get the land, the people who get the connections to the grid with the investments, and also the what we would call the direct stakeholders, so the legal, the financial, different advisors that really start the first process of developing the project before it gets built or it's in operation. As you can see, this is some of the problems that we highlighted previously. How the tough deal, how the transactions are very slow, and how due to the nature of these deals, which are often very long in time and in financial quantities, there's a lot of problems of communication and a lot of inhibitors of the transferring of information and of the connection. And that's really what we're trying to address in nTreaser by creating a uniform platform that really aims to expand the pipeline, offer a more direct contact, and really facilitate negotiation, in turn with the aim of increasing the financing of these projects and as a final end goal, really help to make these developments more attractive. Currently, we have
1 minute warning.
Sorry, 1 minute left. I guess 1 minute left. Okay. So currently we have a working platform. All the technology is developed. We have a couple of projects. As you can see, all the information inside the platform allows for a first financial analysis of the project and really to submit MBOs from across the platform. Our business model focus on not charging developers anything at all, but really we work on success, and we charge a 1% success fee on the equity value of the project, plus an additional 50% for any advisors or additional services offered for the project. And finally, just so you're aware of the milestones we're hitting, currently we have 18 ongoing transactions with over 300 professional investments and utility companies that really are investing in these projects. And we currently have a couple of
Time is up. What are you looking for? What are you looking for?
Final, sorry. The last thing is we're currently racing around. So we would be very glad to have any BCs that think this value proposition, this company is attractive, and also any people in the energy space that believe that there could be any synergies between our platform. We'll be very happy to talk with them and bring them on board.
So before I kick things over to D, quick question: what's the deal with the name?
nTreaser. So the idea, a teaser is basically the summary of a project, or the basic information which both utility energy firms and investors in the utility energy space use to basically decipher if they're interested in the project or not. And we are the nTreaser, we're the new teaser. So we want to get rid of the teaser and really offer a standardized and more efficient way to be able to evaluate projects.
Okay, that was really deep. It took a lot of explanation, but it's not that important for the name. D, you want to kick things off?
Sure, absolutely. First of all, Miguel, congratulations on the great traction so far. Could you tell me a little bit more about the investors who signed up your platform? They're the ones. Now, are majority of your fees coming from the investors or the advisors so far?
So currently, we only get fees from the investors. We are really trying to integrate all the advisor side, but we haven't. It's not fully operational. We do it if they ask us to. If they ask us, oh, who can do the technical due diligence, that we'll put them in contact with different companies. But it's not integrated in the platform. Currently, the only thing that's integrated is the first part. And out of the 300 investors, I think the portfolio is very varied. We have a couple of very local players. We also have very big energy companies that are leaders worldwide in the energy space. There's funds, there's developers, there's also people who build the parks and really want the project when it's ready to build, and then they purchase it there and build it. So we have a variety of investors. 92% of our investors are buyers, and then 42 are sellers. And then of course, because it doesn't add to 100%, there's a lot that do both.
Thanks. So when you talk about success fees, when is the transaction closed? Is it upon the project completion? What's the timeline look like? So
basically, we don't want to be a problem for the development project. So we charge in direct correlation to the milestones that are decided in the negotiation phases. So for example, if 20% of the project is paid at signing, we charge 20% of a fee at that point. If then another additional 80% is charged as ready to build, then we would charge the rest of our fee when the project is ready to build. So we try to mimic or mirror what the deal is made in the transaction, but basically that's that.
We've seen a lot of these sort of solar yield projects across the world in the last few years, which was just terrific. And a lot of the difference seems to be how you attract either the developers or investors. Can you share a little bit about your secret sauce and what's gotten you going on so many projects?
So we have a very attractive offer for developers because we never charge them anything at all. We only charge investors. We believe that the market, there's a lot of really good projects. There's very few good projects, but there's a lot of money, and really developers are the ones that add most value in this market. So we basically don't charge them anything at all. So it's a very simple sell for them. In the investor side, because it's just additional pipeline, and we don't really charge them any price to be in the platform and really evaluate our deals. Then it's also very, very simple sell. We do a lot of email marketing. We do a lot of LinkedIn marketing. Go to a lot of events, but usually most of the flow has been very organic. This is because we don't charge anything unless you actually sign the transaction. It's very easy to get companies on board.
Thank you for that. I
Pleasure.
only have one last question. What's the typical size of the project currently on your platform?
So it varies. I think the small so what happens is that investors make MBOs across the platform, so the offers vary, but usually the prices which we're seeing closing barrier between, I think, $500,000 would be the smallest project we have currently on sale. And I think the largest project was probably going to sell around 40, 50 million. Depends how it's closed. So that's basically the range, but we wouldn't do a bit smaller. We probably could get bigger projects.
Thanks.
So you do think you would be able to have, is there like a certain limit on that project size? Because 1% of a 50 million project is something, and 1% of I don't know how big the projects go, but I assume they go pretty big.
Oh, so the projects can get very big. I think that projects above a threshold currently with our current value proposition, it'd be hard to convince them. I think we are planning to integrate more functionalities and more of the value chain inside the platform, and then we'll be able to capture bigger projects. But currently, it's most utility companies that have projects are very glad to give it to us, because it's really, there's no loss for them if they don't want to go on with the negotiations, they don't go. And so far we had 100% success. Not all the offers that we handed the companies have been accepted, of course, because there's some people a bit low, but at least 1 or 2 of our offers that we given them have gone into the due diligence stage. So usually we have an average of around 12 offers per project, 12 MBOs per project, and usually at least 1, 2, or even 3, which is the maximum we allow go into the due diligence and negotiation stage.
What kind of defensibility or network effects do you guys have in? Obviously, you can get people on board, but what keeps them there if they could always list on other platforms as well?
So we do have network effects. Usually other platforms will charge them to be in there, but of course that is not really a competitive advantage. I think our biggest competitive advantage was that we're gathering a lot of data about what projects are going to be available, when they will be available, and so we're not that scared that they might use other platforms for listing, as long as we are an alternative and we are able to get good offers and manage to keep on growing both our base of investors and our base of developers. We think that we can become a additional like a complementary channel to receive deals eventually, with the hopes of becoming the only platform. But we see that a long way away. Currently we're just working on being another place to get more offers and more conversations with more investors.
Why are you building this?
Why? Well, so my co-founder, she's currently on the call, I believe. She comes from the M&A space, and I come more from the tech entrepreneurship space. So we thought that a lot of the M&A process that is currently used in renewables and is led by big 4 firms like Deloitte and Ernst & Young, it's very old school. It's been inherited by the traditional M&A way of doing things, and there's a lot of digitalization that can occur. So we really saw this project, and that's how we started.
So it was mostly an opportunity thing then, an opportunity plus skill set.
It was an opportunity plus skill set. The market, of course, there's a great opportunity in the renewable energy space, because there's a lot of investment, and we really thought we want to contribute and build a better world, but we can't develop like new solar panels, and we believe that a lot of the technical innovations have already occurred. It's more the implementation, and we thought that allowing a greater the more cash and the more financial resources that can be implemented into these technologies, the quicker they're going to be adopted and implemented. So that was a big motivating factor.
What's the biggest risk you see in the business? What's the obituary look like if you guys don't make it?
So we believe the biggest problem for the business is really cash flows, because of course the payment times for these projects are very big. Usually they oscillate between 6 and 9 months. Which would not be a problem if we're a big company that has access to traditional finance, because you can always accelerate receipts, and you can also you already have enough financial muscle to pull those long payment times. But it's really when you're starting, is a barrier to growth, and it's really a barrier to getting more pipelines. Apart from all the projects we have around 15 additional projects we're about to launch in September. We have a pipeline of close to 100 projects that we are evaluating and seeing, but it's really, we don't have the financial capabilities to really build a team large enough to process that and move all the transactions along while the payment cycles are so long. Does that make sense?
Why are you getting so much business traction but not funded yet?
So we wanted to bootstrap as much as we could, especially because startups in Spain and the States work different, but we really wanted to get to know the problem and really mitigate all the risks as possible before going out to the market and get finance. We really, when we started, we saw the market opportunity, but didn't want to get money and then figure out what the problem was. So we had spent over a year really learning the problem, really learning where the money would be best used and where really the biggest bottlenecks would be, which were different from the origins we thought out. And then after that, we wanted to be very responsible when we took other people's money, that we really knew where the money would be best implemented, and really taking the money and trying to figure out what the way to develop this business was. And I think it was a very correct decision, because really a lot of the risks we saw didn't turn out to be so, and we see new opportunities that we can use the money more efficiently.
Awesome. Then thanks for sharing. It sounds really interesting. Seems very synergistic with what Replace is doing. I hope you guys figure out a way to make that work together. Matteo, you wanna try it with the connection and the phone and the Zoom? You want to share a little bit more about what you guys are doing for waste to value on commodities?
Thank you. Can you hear my voice okay?
I hear you loud and clear. Let me...
Okay, I just hope this is gonna work, because I'm trying to get the video from the phone. Can you see me as well? Okay. All right, so what I'm gonna try and do is I'm gonna try and share the screen. Just give me a few moments before I can start. Sorry.
We got your desktop.
Sorry. Let me just.
All good.
Let me just. So can you see right now?
Trees.
Okay. It's fine. Let me just. Sorry, apologies. Let me just make sure that I'm ready for this. Just a few seconds. Okay. So yeah. So I can start the presentation now. So yeah, this is the picture from Letoon Technology, and I'm one of the founders. Now, what is really the mission of the business is really to develop innovative products and cost-saving technology. Really, we want to transform vegetable mattresses and medicinal plant thanks to the ultrasound technology. The industries, the customer will be pharmaceutical, cosmetic, and food. Now, what sort of problem are we trying to solve here? The key problem is food waste, really, and apart from also all the other issues that are listed here, food waste is worth about $1 trillion related to the economy, according to the world economy, according to the latest research. Now, obviously, we can talk about agricultural waste as well, and here I put quite a few of other reasons why we are really in business, really. So the circular economy potential is that really we want to make sure that we use the waste to reuse, to repurpose, and really to recycle to create value. Let me tell you about the setup so far and our supply chain. Effectively, what we have is 5 steps here. You can see them listed here. Now, for each one of those steps, we have either a joint venture partner or we go part of the supply chain that we control. Now, the first part of the supply chain is technology. And here we go Ecotechne, which is our partner. Then obviously, in terms of raw materials and product design, we go Trilife Pharma, another business, which is also a shareholder as well as a JV nutraceutical partner. And then we got the industrial partner, Fito Prime in San Marino. As you can see, we got a location there, an industrial site in which we're going to operate our activity. Then we got a second partner and shareholder as well, which is a laboratory pharmaceutical as well. Now, what's the solution, really? The solution, I try to list here the 4 key items. So really, one of the biggest things is really GMP. It's GMP certification that we have thanks to our partners. So we are able to really meet the highest possible standards for all our customers. In terms of the roadmap, what is the strategy? What is the growth strategy? Are we scaling future? And in September next month, we're looking for the 1.9 million funding, which has been agreed. It's like asset finance really for technology build to be ready in Q1 2024. In June 2024, we're gonna increase the capacity 300%, effectively, after we start producing and selling. And then between 25 and 28, we're gonna go through, expansion for also M&A, technology acquisition, and we want to conquer 0.3% of the European market. Now, in terms of our competitors, this is where we think we stand in terms of affordability, more verticals. Now, in Dana and Pharma Extractor and Liquor, they're very, very strong competitors, but we think that we are able to do co-extraction, which nobody else does, and also we're able to provide clinical services, which our customer really said they would like to really have, if we sell the products to them. This is a snapshot about attraction for forecasting for success effectively. So we're looking for trebling the capacity in 2026. At the moment, really, we're looking for the lower hanging fruit. And this is a 2-year action plan so far. Joint venture was set up early in the year. Then we started up the UK vehicle in June. We started the process for the UK, the 2 million equipment finance in July 2023. Ideally, now we start for an equity raise, 2 million in September 2023. In 2024, equipment ready in March 2024. Production starts April 2024. Second equipment ordered in June 2024. Get ready for the 300% increase in production capacity in 2025 by the end of next year. Now, this is the team. So we are all either founder or joint venture partner, effectively. We're all shareholder in the business. In terms of the structure at the moment is, so we got the shareholder here at the top, really.
1 minute warning.
We got a UK company, and we got joint venture partners in the middle. We've already got the first SPV set up, 75% equity, 25% minority shareholder to our partner who gave us the guarantee for the equipment purchase initially. We got 2 more SPV that we're discussing in Canada and in the Middle East. Funding 2 million. We're looking primarily for money pre-operational, which is 600,000, scientific studies 300,000, novel food certificate, which would be good for the medicinal part of our business, really 500,000. And the second equipment tranche one really next year, 35%, 700,000. So that's pretty much it. I'll put it in 5 minutes.
Awesome. Thanks for sharing.
I tried.
One bit of feedback, just want to bring it back to D as well, was very detailed on the operations, not very detailed on what's actually happening. Would be my biggest kind of challenge or kind of question mark around is just the actual business and what you guys are processing and what you're creating and how you're building what the actual business is.
Okay, that's great. Shall I stop sharing and I'll start answering all these questions?
Go for it.
I can go ahead. Yeah. Okay. So what are we processing exactly? Now there are about 200 plus 200 vegetable matrices that our partner have been working on over the last 30 years. Now the queen, shall we say, or the king, depending on the way you say, is going to be tomato skin waste. Now, next to our industrial location that belongs to our joint venture partner shareholder, we go more than 10 times the quantity of tomato skin waste that we would need to process. Now that's going to be probably the biggest item initially, lycopene. Lycopene comes at between 400 to 600 euro per kilo, just to give you an idea as a product. We got citrus waste already lined up as well. Citrus waste is going to be transported from southern Italy into our location, which is in the middle of Italy, really. Other than that, I can tell you that our scientific team is working really continuously. I mean, it's been quite a few years on cancer research. So there are some customers who've asked us not just to provide the product, but also clinical studies. We go co-extraction for cancer research, for example, going on between green tea, ginger, and green tea. Well, there was another material.
Do you say cancer research? Yeah. So producing like pure chemicals?
Yeah, producing natural product against cancer. For the turmeric, yeah, turmeric is the other one. So there are always research ongoing. I mean, the biggest reason for this business to exist is to keep on researching, really. We are lucky to have the Italian Society of Natural Medicine, really, as our, main ecosystem, shall we say. In fact, all the joint venture partners are coming from there, and they're all involved in this activity for quite a few years, really. They've already so we've got expression of interest from quite a few customers. Most of them are blue chip pharmaceutical businesses for which formulation has been done really for quite a number of years, really. So we can call this as a potentially an agglomeration, really, of a scientific studies and partner who really want to now develop the next best technology to to really develop all the product from the circular economy, really.
Sounds like a lot of different products and moving parts and businesses and complexity. It sounds like a lot.
Yeah, in fact, although
and that's me saying that, and I do a lot.
Absolutely, yeah. I would say this. I would say initially the business. This is a startup which is not going to burn any cash effectively. So, apart from the equipment financing that we need, and the only money that we need right now, we may not even need it, but I think it's worth asking for it. It's for an acceleration of what we want to do, because we got lower hanging fruit at the moment that we want to pick up. Effectively, the lycopene, demand that we have, and also the other product from the citrus waste. There's obviously going to be a lot more in due course in the next few years, obviously. But at the moment, it's about picking up the lower hanging fruits. It's really the two biggest extract we're going to produce. They're going to be lycopene and citrus waste.
Do you want to take things away? Always feel free to jump in as well. No need to raise the hands.
Sure, absolutely. So like Matt, I'm a little bit confused about what Letoon's actually doing here. Like I have an idea of what your joint venture partners does along the way. What is Letoon? Are you providing the technology? Are you licensing? What are you doing here?
We are converting waste into commodities for the pharmaceutical, cosmetic, and food industry. We are not at the moment, well, obviously we'll do M&A after we start generating cash flow, after we reinvest the profits. We will be doing M&A also in tech. At the moment, however, we already have a tech partner. Sorry, I went quite fast, but I wanted to keep it to 5 minutes, really. We got a tech partner who is already providing the ultrasound technology. Now, ultrasound technology is not used by any of our competitor, effectively. Is up to 6 times faster and up to 75% cheaper. But we do not own the technology at the moment, not now, at least. Once we start generating profits, we'll do M&A and we'll go for that content that we want to have as well.
So you've created this joint venture out of this technology, which you've got an agreement with a partner with to process, and then you're processing waste at your own facilities, or is that also a joint venture?
We are processing waste at the facility. Basically, what we have is these are shareholders. This joint venture partner is also shareholder. So we are producing. They are part of Letoon Technology. So we are processing the waste at that site. Effectively, we are an asset light business. We're an industrial business, but at the same time we are asset light because the industrial site is provided by a shareholder partner.
Okay, I understand that, but in terms of what the company itself,
like, what do you guys actually do?
Yeah, that's kind of what we're trying to get
I should have. Okay, so Letoon Technology, let's say, acquires waste, vegetable waste. Okay, and that waste is then converted into a commodity for the cosmetic, pharmaceutical, and food industry. This is what the business does. This is the activity. Now, the revenue will be the sales to the pharmaceutical customer, for example. So we got a pharmaceutical customer, they want to buy, 100 kilo of lycopene. We sell it to them after we process it. That's what Letoon does. I would say the subsidiary of Letoon will do, because we'll set up a subsidiary for that.
I may have missed it, but on the team slide, I think you're the CFO and the COO. I didn't see a CEO. Is that right?
Yes, in fact, what we are doing with this is part of our business plan, that we are looking for we're going to recruit a commercial director. I mean, at the moment, obviously, it was almost my job to really put, all the joint venture partners together, because this is coming from a previous business effort that was only looking at cannabis. So we decided that instead of doing cannabis, we are going to do, natural resources. Obviously, we're going to do only vegetable waste, because we understand that the investor, the investment environment for cannabis is not really, that favorable. So we decided to, me and the other founders, really to put this business together. And obviously, one of the biggest things will be to recruit a commercial director. We don't have a CEO at the moment as such, but we want to recruit one. It's in the business plan, which is very detailed. I know I sent it to Matt quite a few weeks ago. So there are 50 pages there. As soon as we start with the equipment financing, we are recruiting for a CEO and a CMO as well.
You refer to your joint venture partners quite often as shareholders. So do they own, aside from the SPVs, they own a part of your main entity?
They own part of the main entity.
How much?
We got 3 joint venture partners. They each own 6% right now.
Okay.
They're already operating, they're already selling, they are ongoing businesses, really. So they've already got their history, and so that, we're very glad to have them on board, of course.
Is that just in exchange for their participation in your value chain, or are they providing the finances for, I think I saw equipment finance before even your equity fundraise. So they provided some finance for you to purchase equipment already?
The equipment financing is actually part of the joint venture where it's a subsidiary. The funder for the equipment financing is a shareholder in the joint venture, not in the top company. So what it did, they provided us with up to €2 million financing, effectively through guarantees, and we are lending effectively from them, and at the same time we're giving them shares as well.
So if your business plan, and obviously this is a big rotating cycle that you're kind of setting up, if everything goes right, what is the ultimate outcome? You're going to be the main supplier to pharmaceuticals? What is the goal here?
Yeah, pharmaceutical, the expression of interest are coming especially from the pharmaceutical industry. So they're interested. The expression of interest, they tell us that not only they would like to buy from us, but if we could offer them additional services like clinical studies, for example, which we're able to do, that purchase would be even obviously easier for them, because eventually what they do is they buy the commodity, they do their own formulation, and then they would like to sell also clinical studies to them. So effectively, we will sell them clinical studies, and those clinical studies, they will obviously add value to the commodity as well. None of our competitors at the moment is actually selling clinical studies. And the other differentiation is that we do co-extraction as well. So we put 2 vegetable wastes together to design a product which then becomes a unique product for the customer.
How much post-processing do you have to do for those ultrasonic extractions? So talk to an extraction specialist, and he was saying that ultrasonic's great because it's super fast, except for it sucks because it's still all mixed, and you then have to do a lot more sorting and kind of separation after.
Now, understand the cycle will last about half an hour, and then there will be just another half an hour to prepare the equipment for the next cycle. Obviously, if there's a question, there's a technical question I cannot answer. Apologies for that. I will.
No, I mean more so like it's a much faster fishing process because it has much smaller holes, and you're trying to catch sharks, but you're actually catching minnows as well.
Effectively, yeah, the ultrasound and water, these are the only 2 ingredients, effectively, ultrasound and water. Now, what is the advantage, I would say, is so micronization, better sort of isolation of the active principle within the skin waste, for example. The other thing is temperature. Temperature is really ideal. If you use solvent, like most of our competitors do, you tend to ruin the active principle as well. And the other benefit, it takes a lot less electricity, like 120 kilowatt instead of 250. And the other benefit is that obviously it's cheaper. I mean, it's 75% cheaper than CO2 supercritical, for example.
Awesome. Thanks then for sharing. Dee, do you have any more questions?
No, that's it.
Then take this time to say, if you guys want to apply to an upcoming session, thestartuptank.com. If you're looking for a partner in Clime to help you grow and scale your pre-seed, pre-series A, pre-seed or seed climate company, check us out, 4WARD.VC. And we've got a lot of resources, our climate solutions database, a bunch of free programs for investors if you're looking to get more deal flow, for family offices, high net worths, accredited investors looking to learn the ins and outs of sustainable investing. It's all at 4WARD.VC. Pick your poison, pick your program, and we'll have something there for you. Speaking of having something there for you, Lana and ESGentle is trying to do just that with a marketplace for climate solutions. You want to share what you guys are doing, Lana?
Yes, I'm really excited. Thank you, Matt.
Very excited to have
just
you
share
as
my
well.
screen. Okay.
Looks good. Take it away.
Awesome. Give me a second. How do I? All right. So, very honored to be here. My name is Lana. I'm the founder of ESGentle. Before I go into the introduction of our company, I would like to take a moment to quickly tell you who I am and why I'm here. So my name is actually not Lana, it's Svetlana. I'm originally from Russia. I always had an American dream. I knew I would be here in the school. Well, not really, it's a joke. But so I always wanted to be in the US. I knew I wanted to make an impact. I transferred from my Russian university to the University of Alaska Anchorage, studied finance, worked at FinTech in New York. So one day I was given our resumes outside of JP Morgan, and another day I was walking into this building as a vendor, working in the capital market space and learning everything about the bonds. So how did I get to this stage? ESGentle initially had started as an alternative ESG data provider. So in my latest role, I worked as a product manager and talked to investors in the secondary market every single day. Saw some shifts in the industry where some of them were looking to align their clients' portfolios with their values. And so at the time, we thought it would be the greatest solution in the world to help the industry navigate through some of the challenges. And I guess to backtrack a little, my job previously was to find the right ESG data provider for my company. And it was tough because of the lack of the standardization and other problems. We failed to do so. So this is how ESGentle got started. But companies started coming to us. And when we started publishing data, and so we launched ESGentle as Glassdoor, but for sustainability, companies started coming to us and saying, hey, Lana, can you help us improve our ESG rating? What's happening here? What are the solutions we should be considering? How can we reach net zero? And we quickly learned that we thought investors are the ones who are confused and need help, but it turns out that companies are really the ones that struggle the most. And so we were looking for the ways on how to help them without being too hands-on, not having enough expertise in some very niche industries and areas. But we knew amazing companies. So I'm based here in Silicon Valley, and every day, we meet a lot of great startups, and renewable energy is hot. And you guys know this market is just going up. We were looking to connect them and do the clean tech research, because the reality is a lot of sustainability officers, they don't have time to take 2, 3, 4 demos a day to learn about every single solution. Even if they wanted to, they still need to do ESG reporting. They need to do a lot of stakeholder communication. So I was talking to one Fortune 500 company, and they shared that like this particular person covered both North America and Europe. And you would imagine, like, you know, if a company has complex supply chains, manufacturing process, they cannot decarbonize overnight. So the big question, in the big elephant in the room, is really, how do we reach net zero without sacrificing profits? And the answer here is super complex. So we looked into the whole universe of solutions and how we can help companies build those strong business cases and have both business value and environmental transition from fossil fuels. And energy efficiency turned out to be one of the areas where it's a no-brainer. So I would say today we have, and apologies, let me hide this from the screen, but today we have 74% up
45-second warning,
from
sorry.
last year. Thank you. So what we do is we help companies to find the best energy efficiency solutions, and we work with Fortune 500 companies, consulting agencies, and private equity funds. Our competitors capture from $30,000 to $500,000 a year for this data. We're looking to democratize the space, and we have a team of 8 engineering.
Time is up. What are you looking for, Lana?
So we really looking to raise brand awareness. We haven't started fundraising yet. We are pre-seed, early stage startup. Would love to hear your feedback.
Awesome. Thanks so much for presenting. I'll hand things over to Dee first.
Thanks for your presentation, Lana. Now, help me understand, have you started approaching customers? Have you acquired any customers?
So we currently have a big pipeline of customers. We launched the marketplace and pilot, and we have users. Right now, we're not charging for our service, just to gain traction and get a lot of feedback on what we currently do. But we do have users both on the buyer and the seller side.
On the platform itself, on the slide that you showed me, the platform, it seems like, and maybe it was just because of that slide, it was offering all of the direct air capture offering. So are you offering carbon offsets, carbon credits? What is it that you're selling via the platform exactly?
Apologies. This is like an old slide. We do want to show some of the latest innovation as well. This is not our main focus. We focus on energy efficiency. So we're looking to provide an overview of the clean tech market in general, just to help our clients guide through the landscape, but it's not our main focus.
So what does that look like in terms of energy efficiency? You use their
so
data.
let me give you an example. Let's say a company, yes, so from one hand, let's say you come in, you know nothing. So we get you, we give you information what net zero looks like for your industry and for your location. What are the scenarios and specific solutions that you may want to consider? So the basic information is available for you at no cost. If you want to plug in your own data, get the analytics, and get custom recommendations with the best with the best forecasts available from us, that would be like a paid feature. As for our partnership agreements, I'll give you an example. So sometimes, let's say in the manufacturing space, there is a CNC machine, the one that cuts metal. So that machine costs around $100,000. Typically, a company of a size like Fortune 500 will have dozens or 100 of those machines. If we increase energy efficiency at least by 50%, that means they can cut their equipment by half. And so that means we could already make a business case and bring cost savings almost like around $1 million or so. And so the ROI is positive, and at the same time, they cut the emissions. So we show solutions just like that for specific locations and specific industries where it's very easy for a sustainability officer to come in and without being harassed to learn everything about the space and get connected instantly with those providers.
I did want to ask you further about the sustainability officer, because I think you've isolated that as your customer profile to start. But when you were describing your energy solutions just now, it sounded like you have to interact with various points within the Fortune 500 company itself, right? You're actually literally talking to operations. You have to talk to purchasing. You have to talk to procurement a long cycle. Is this actually competitive to the sustainability officer? It's like a replacement to their job function, or is it partnership? What does that look like?
It's definitely a partnership. I don't think it comes. It will not be a replacement unless the company has no resources and they just need some starting point. But to go back to your first question, so based on our user research, it turns out that most sustainability managers, especially high up, like sustainability officers, they do come from operations background, or sometimes they come from finance background. And so they would be more like me, and they would be, I guess, like actively looking for support from someone like us. And so like, yeah, I would say it's definitely, we consider them users in the space because they are the ones who maybe not the direct decision makers, but they're the ones making the business case, and they're the ones challenged with decarbonizations. They're the ones responsible for reporting. And now with SAC rules coming up this fall, I think it's going to be even harder for them to not just report, but to show the commitment to net zero.
I think that's an interesting insight into the background of what sustainability officers are. So maybe we could unpack that a little bit more. What does the decision process look like if somebody decides to go with you, say, your energy efficiency proposal makes sense, let's pull the trigger? Who makes what purchasing decision at what time?
So it typically would be the CFO or someone on the treasury group. They would review findings and reports delivered by a sustainability team or someone in the sustainability role. So yeah, based on what we've seen, they wouldn't be too much into the nitty-gritty details. What matters to them is really cost-benefit analysis. And depending also on the type of company. So if it's a large organization, they would definitely be under pressure to do net zero. If it's a consumer-facing company, also the same case. In Europe, you guys probably know it better than I do. The regulation is much stricter, and the consumers even more passionate about the topic. And so we see those trends coming in on the buyer side, where private equity, you would think, why would private equity be Lana's client? Well, we have the answer. It's a business for them. They know that historically, if they introduce ESG aspect, they show that they could turn company a little greener before they take it to IPO. They will have 10 to 50% jump in the valuation.
Well, I think I know a lot of private equity companies with procurement services in this area. Like
yeah, and
Apollo
a
has
lot of
one
the big
those.
ones have a lot of the big ones are bringing in the big guns as well. Like,
Yeah.
So what size of company does it actually make sense for? Because it seems like with a lot of the large corporates, they more want to hire somebody to do this. Are they looking for an a la carte option? Or are they looking for McKinsey to come in and give them a big price tag for no reason so that McKinsey signed off on it?
So I would say it's probably different type of audiences we're talking to versus the ones McKinsey is talking to. So they have their own database. I'm not sure how that looks like. I know for a lot of consulting agencies, they would have partnerships where, you know, they would basically pass some deals to the preferred providers. In our case, it's more like, hey, we're open source. This is our research. You do you. But based on what we've seen, even from conversations with consulting agencies, it's hard to keep track of the market because there are so many companies popping up these days, and they're looking to use us as a support source as well. And so, Matt, I shared with you, I think last month, we had one guy, he was ex-McKinsey, and he requested a demo on our marketplace. And so that was really interesting because they also see the need of educating themselves on this topic and helping guide their clients.
But are they going to pay for that is the question I have. So it seems like information wants to be free. And if they, even if they do pay for that, are they then just going to go and cross-sell that to their clients and then there's no transaction or anything happening? Are you guys the Wikipedia?
No, we're not the Wikipedia. So we do generate leads for the buyers. So as I mentioned earlier, we have a couple of tiers. First tier, where the basic information about solutions and companies, it's available at no cost right now. It's hidden in beta, but soon enough we will launch it publicly, and it will probably disrupt the market as most companies charge for this data. Now, why we're doing it this way? One, there are a lot of smaller organizations that probably can't afford any kind of research like this. And two is we see that larger organizations are willing to pay for more custom analysis, where they could plug in their emissions data, and we, instead of them browsing through a whole universe of solutions and seeing, you know, what's available versus what they should be considering, like we could generate a lot of scenarios similar to ChatGPT, but more tailored to their needs and how they could get ahead of the market and what other opportunities out there for them to make it an ROI positive investment. Now, when it comes down to consultants, we don't know how it's going to look like. We working through some of the details. They definitely generate a lot of leads for us. So we make arrangements with our partnerships where it will be a subscription-based model where they go through verification, and to be able to get a little more like highlight and direct information and get connected with seller right away and get some analytics on how they do, they will also be the ones paying for the service. It just currently we're filling out the database and we are working through our pilots. So far, we've seen a very positive market reception.
Can you tell me a little bit more about your team? Is it just you so far, or who else is on your team?
Yeah, absolutely. So we have 8 people. We have 1 software engineer. We have a team of researchers and UX UI designers, 4 people there. An ESG consultant. She works full-time as a consultant in ESG. Then we have a VC advisor and a marketing team. And yeah, and then there is me working as a salesperson. So I would say in terms of software development, we definitely want to add more resources. Right now, since the database is kind of like a big core, like clean tech research is really the product. It doesn't require for us too many engineers like we find just with what we have today. But in the future, we definitely need to speed up a little bit on some of the analytics and scenarios that I mentioned earlier.
How do you plan to acquire customers outside of your, like, this is free information model, right? Like Matt said, how you plan to acquire your paying customers here?
Yeah, absolutely. So we doing a lot of partnerships, not just with clean tech companies, but with nonprofits and VCs. A lot of them somewhat like recommend us to their clients, recommend to some get encountered. So like, for example, for VCs, you probably know it's in your interest for your portfolio companies to be highlighted. But just like with this event, you know, you want to bring in more like different players. You want to show the space. So in this particular case, we also see that when we partner with nonprofits, with financial organizations, with consulting agencies, and events in New York. So we've done events for SF Climate Week. We're looking to come to New York Climate Week. And that definitely gives us that extra boost. But I feel like building the community is really the key, which is why we recently added a marketing team. And we're looking to do a lot of social media content and really engage with decision makers who are our big supporters and willing to introduce us to other companies.
And how much actual info are you providing on the solutions? Like, we decided to add a climate solutions database just because it makes sense.
I don't think I fully understand this question, but let me break it down. So are you asking do you want me to go through all of like pieces of data that we collect?
Like, yeah, like how granular are you getting on these companies in terms of A, information, and B, information vetting? Because if it's not great data, the data is useless. And if it's not enough data, the data is useless.
Yeah, absolutely. I would say it's a tough spot right now. The reason why we're looking to charge for like onboarding fee and verification, because it does in fact take a little bit of time, and we get 60 pages of materials sometimes, like the methodology and everything. And so this whole process will be automated. Right now we're selling trust, and I think the reason why we get this traction because we are here for the mission, and so companies see that and they hear that this is what we do. So the type of data that we collect is really the activity that company does, the business cases, recent work. Then we pack it into the ESG framework on how it's actually going to impact that company score, or like specific, specific scores depending on who they are. So companies would also make accounts on our site, and this is what's coming up in development next. And yeah, so based on all of that data, we're able to do a proper curation and vetting as well. So we already had cases when a company would come in and they would say, oh, we have net zero flights, or like, we decarbonized airline industry. and then you would look into materials, and it would obviously not make sense. And so we would feel comfortable saying no to this type of partnership. So yeah, this type of companies, if there is any greenwashing pattern, we wouldn't include them. But yeah, we do our best. We would like to get the credit.
Help me understand. When you said 20 to 60 pages, so when a company gets onboarded, you send out forms for them to fill, and then they supply 20 to 60 pages of materials to you. Is that how the process works?
Yeah, so they drop their information in Google Drive. So sometimes it could be pretty data heavy, just because we want to capture as much of their past work as well, and some of their pilots information and metrics and performance. So yeah, it's quite a bit.
How much are you guys charging for that?
So let me go back. Let me share my screen. So this is a business model we have in mind. I will need to update a couple of details here. But yeah, so like for
you're charging per
onboarding
month just to be listed as well. Okay.
Yeah, well, this is a long-term vision. Right now, we signing up our partners at no cost, but we already discussed with a lot of them that it will be a subscription-based model. It doesn't mean that we wouldn't capture their data nevertheless. We would just not provide as much detail and highlight, and wouldn't particularly generate leads as we would do normally.
Understood. I think that's all the questions I got on my side. Dee, do you have anything else?
That's all. Thank you, Lana.
Awesome, Lana. Thanks so much for presenting. Maybe a good solution here for you. Wind harvest. And Kevin, you want to share what you guys are doing with your innovative wind, vertical axles, so to speak?
Sure, I'd be happy to. Let me share the screen and go over to my PowerPoint and okay. So, hi, my name is Kevin Wolf. I'm a CEO and a co-founder of Wind Harvest. We're bringing turbines where they haven't gone before. There's a lot of interesting places that you'll see in the slideshow of why we think will make a big difference in bringing a lot more unexpected renewable energy to the world over the next 10 years. The core problem is that these horizontal axis turbines, where the drivetrain is horizontal, these are the standard propeller type turbines, cannot deal with turbulent flow. Those long blades hit a gust or a turbulence, it shakes those bearings up there in the drive chain and wears them out. And that is an expensive repair job. So they lift these turbines high above the turbulent zone and they spread them far apart in the wind farms. And that leaves the turbulent wind with no technology to use it. And this technology problem has been around for a long time. People have tried and tried to figure out how to bring a vertical axis wind turbine into that turbulent zone. And we've been at it for a very long time. There's harmonic resonance problems. It's a very tough environment. And there's a lack of awareness of how big the market is within the industry itself. And these created problems for the whole vertical axis wind turbine industry. Now, we solve the problems in a number of different ways. I'll introduce you to Dr. David Malcolm later on under the team. He brought with us an aeroelastic model for vertical axis turbines, and we used our models 3.0 and 3.1, the data from them, to validate the model. So we're the first to have a fully validated aeroelastic model that can accurately predict where harmonic resonance is, where loads are, et cetera. Now, to make a turbine as tough as it needs to be to handle this turbulence, you end up with a very long fatigue life. It's an all aluminum, all steel turbine, and it'll have an expected 75-year fatigue life. And then we solved the problem of the market because we got access to the UL Wind Navigator data. We have a subscription, and we evaluated 10,000 wind farms for out of the 33,000 that were available. And we determined that at least 20% of those wind farms have excellent mid-level wind resources at below 30 meters above the ground. That equates to about a $400 billion market now. You can get about 2 to 4 times more turbines, megawatts of our turbines per wind farm in a lot of places. These are easier to build than new projects because the land's already zoned. It's already set up with roads for the turbines, and it's in the windiest places in the world. And there it sits waiting for a technology that can make use of it. And we think that the ornithologists tell us that birds will see vertical axis turbines much better than they will see horizontals, and so will be much more bird friendly. Now, getting into wind farms is difficult. It'll take a couple years of data, LiDAR data, because they don't want us to harm their turbines. So the immediate market is the secondary distributed wind market, where tall turbines cannot go, but it is windy. These are like telecom towers on ridge lines. This is Air Force bases where radar is harmed by the tall turbines. Small properties where it's very windy, like the Microsoft data center in Cheyenne, Wyoming, where they can't put tall turbines on, but they could probably put 10 megawatts of our turbines within their setback easements. Now, this is an example of Barbados has great trade winds. It cannot put the tall turbines on for lots of reasons. It has an excellent 17 cents a kilowatt hour power purchase agreement for 20 years. And they can make 50% of our turbines in the existing facilities on the island. And they want our turbines. I'll tell you about Dr. Ariana Marshall. She's been working with us for 7 years there. And that's the reason why we have such great advancement in Barbados. Being a first to market has all kinds of advantages. There aren't presently any turbine companies we know of pursuing turbulent wind. The vertical axis turbine companies are offshore, or they're raising their turbines high above the turbulent wind zone. We got 7 patents pending. It'll make it difficult for anybody to make a steel and aluminum vertical axis turbine and not have to use our patents. And we expect our biggest income stream to be licensing our patents to the GEs and Vestas and Mitsubishis out there in the world who are going to want to enter this market once we prove it. We're raising $10 million. This is to develop projects to commercialize our product, build the company. It is a post-money valuation of $45 million. And we have raised about $20 million so far. This is our team. Here is Dr. Ala Ajala. She is a principal engineer and runs our engineering team. She's fantastic. This is Dr. Marshall. She's down in Barbados. She does an amazing job down there for lots of different things in sustainability. And this is Dr. David Malcolm. He's retired, but he works for us. We have on our team about 6 staff, and the rest are consultants. And we have a great team of consultants who are very loyal to the company. That's it. This is, just one thing I wanted to pull out here is that vertical axis wind turbines like ours will get about 4 times the margin on the sale of horizontal axis turbines. And I'd be glad to explain that to you. We are looking to, it's pretty much limitless scalability because all kinds of facilities can build our turbines. But we do not make our own factories. We make our assembly facilities, but the components come from all over the world, and they can be made in most places around the world. And with that, I'll just wrap it up and let you ask your questions.
Awesome. Let me pull in D as I do. Why is this Series A4? Why have there been 3 Series A's already?
Oh, well, we did our Series A1 in 2012, and then we didn't have enough money to make it all work. So we borrowed money from the lead investor in convertible notes, and then from all kinds of other investors. The company survived that lead investor's death and my 2 co-founders' deaths in 2015. And that family stopped investing. So we ended up borrowing from family and friends. And then last year, we converted $9.2 million in debt into the A1, A2, and A3 shares. So we have the A4 round still open.
I meant more, why is there not kind of the business traction so that it's not as much of why do you still need to be raising this much money despite having raised this much money?
Oh, I think the answer there is it's super difficult to bring utility scale technology to the market. Basically, most utility scale technology sells out in about technology readiness level 5 or 6 to a big player who can then take it through the rest of the way, because it is so expensive to finish off the prototypes. And then the last one is technology readiness level 9. How long does it take a bank to finance your customers when they're buying millions of dollars worth of products? Well, that's could be a year or two of data from dozens of turbines before you complete that. So we are a very rare company that has actually made it this far and is still privately held, but it takes a lot of money to get here.
What are your goals, speaking of privately held?
Oh, we're in discussion with one group who wants 51% of the company, but they would put in a huge amount of money, and they're the kind of international player that could really bring this company rapidly to the forefront. But if you know, I'm interested in an IPO personally at about 3 years from now, build the company up and then put it out on the public market. But it really depends on really what those lead investor wants for the A4 round. And it's difficult to find a lead investor because very few companies are willing to invest in hardware, especially utility scale hardware that still has not fit into revenue. Now we'll be in revenue next year, but we're not in revenue now. So that makes it difficult.
The 51% Vestas?
No, I can't tell you anything about who it might be.
Okay,
Vestas CTO, I'll tell you a quick story. Vestas CTO told us that they have no capacity to build vertical axis turbines. They're building bigger and bigger offshore ones. They have no aeroelastic models. They have no engineers who know anything about verticals, but they encouraged us to get through certification and into sales, and then they would like to buy our company.
Okay.
But they're not going to do it themselves.
And how long do you think that process would take?
We're 1 year out from finishing certification and having 20 turbines in the ground.
What's the revenue look like then?
We expect to have $11 million in revenue next year and another $38 million in revenue in 2025.
Margins?
Is that based on pipeline? Or I'm sorry. Go ahead.
No, you're good. Good question as well.
We've been developing projects because we know that customers can't get loans and they can't borrow money. We have to be our own project developer. So our Series B round, expected $15 million, capitalizes a lot of these projects. Now, the good news is the Biden administration's passage of the IRA allows for 40% tax credits, and we qualify for a 40% tax credits. It involves loans and grants and government, forgivable grants and loans. So it's really reducing the amount of capital we thought we'd otherwise have to bring in. But you still got to bring in your own capital until those banks have enough data that they'll finance the projects themselves.
I mean, there are project finance people with extensive experience on renewables, even vertical axis wind turbines, which has, as you point out, been on the market more or less for a decade. I think the more interesting question is, how do you get to the point where the project finance people will want to get in, which is actually before the banks. And that's kind of where your traction, you're saying you want to be the developer at the next stage. So maybe that's the answer to my, is it pipeline or is it contract sales? You have offtake agreements already that you're ready to develop for?
Well, let's give you an example. AgTech, the Anza Electric Co-op, a rural electric co-op in Southern California, the Anza Hills can put in 6 to 12 megawatts of our turbines. That's 100 to 200 turbines. We have a letter of intent with the AEC for them bringing a 3-phase line up to the hill and off-taking the power. We're in conversations this week with their wholesaler electric co-op to create a longer term, a more solid agreement. We have agreements with the property owners, verbal and otherwise, that they want our turbines on those properties. So it is set up for our turbines to come into that hills, first with a 1 megawatt project of 16 turbines, and then build out the project. So that'd be 2024, and then 2025, 26 would be the build out. So there is a very large, multi-tens of $1 million project with the Anza Electric Co-op as the off-taker.
Yeah, but as you said, that project would be built out by 2026, and it'll be first operational optimistically at 2026. How are you going to? I think
1 megawatt in 2024. So we'll put in a first 1 megawatt project and we'll sell about $4 million worth of turbines on that 1 megawatt project.
Can I go? Let's take things back a little bit. In your overall market vision, where you were talking about doubling the capacity for 20% of wind turbine farms around the world, can you walk me through some of the assumptions? Like, what is the assumption around the transmission or the curtailment situation or the energy rights situations on these projects?
So the first projects are going to be what's called capacity enhancement projects. You leave the substation the same size, you leave the transmission the same size. In a 100 megawatt wind farm, you'll add about 25 megawatts of our turbines. As the horizontal axis turbines come to rated power, that means their full energy output, they get to pitch their blades earlier. Now, the biggest wear and tear on wind turbines is coming to rated power and a gust comes through. So they are looking to try to find ways to extend the life of these turbines. By adding our turbines into the understory, they can pitch those blades earlier and still keep the capacity at 100%. So that is the no-brainer, right? The roads are already there, the land is already there. You don't have to change the substation or the transmission lines. And in a 100 megawatt project, we can sell 25 megawatts of our turbines.
We talked to Windscape. They're doing something similar, but with AI to automatically tilt the blades prior to burst.
Yes, that's perfect. That is exactly what the kind of stuff we're talking about. The problem, though, is that you can't add more horizontals to most wind farms. They've maxed it out. So they have to increase the capacity somehow in order to be able to pitch the blades earlier so that they don't lose their energy, full energy output through the substation. So that's the easy answer. Add our turbines underneath. The science out of Oxford University and Stanford and Caltech says that we'll get they'll see a 10% increased output for their tall turbines because our verticals will drive the faster moving wind down into their space. There I am. So that's one of the secondary benefits is this great modeling and actually field work that's come out of Caltech that shows, oh yeah, you got these verticals, they shed vortices, those vortices cause vertical mixing, and down comes a faster moving wind from higher altitude, and the tall turbines will get the benefit.
What's the bad part? What's the catch?
They're worried that we're going to cause turbulence for them. So we have to we have to do LiDAR data, and we got a $250,000 piece of equipment, and we've got to collect all this data to prove that the vortices stay in the same layer and they dissipate when the modeling says they dissipate. And then you got thermals. What happens if you're in a thermal area in Southern California desert? Will that cause it? So it could be a while before some wind farms are confident enough that we won't harm their turbines, that they'll let us in.
Yeah, I mean, Kevin, I think you're touching on the right points here. The vertical axis wind turbines technology has been there for a while, and you've been at this for a while. What's different about right now, other than the IRA tax credits being available for projects? Like, what's enabling you to hit the market now versus the decade previously?
I never had the aeroelastic model, and one of our co-founder, the inventor, did not believe in aeroelastic modeling was even possible. And so when David Malcolm retired and I was able to snag him into the team and he jumped at the chance to validate his model with our data, that was a breakthrough. And so no one else we know of has the kind of aeroelastic model for vertical axis turbines that we have. And without that, you can't predict harmonic resonance, and these vertical axis turbines fly apart. And we had that problem with some of our past turbines as well.
Are you planning to keep that proprietary, or are you planning to license that eventually to other manufacturers?
Well, we're going to license our patents and we'll license our modeling as well. What we expect will happen is that we'll be in the project development business. We're cherry picking off a lot of great sites right now that have the best wind speeds and the best power purchase agreements. But it's such a huge market. What do you do about that? So we expect Vestas and GE and others to get in, and then they're going to find out, crud, you have to have an aluminum and steel turbine to withstand that kind of turbulence. And there we are with our patents, and there's not many ways to get around them. So they'll want to license our patents and they'll want to license our modeling. And we'll be happy to do that.
Why do you think somebody like GE or Mitsubishi would be so eager to jump in this particular segment of the market when they're making a killing selling new blades?
Well, they're not making a killing. The Siemens is in trouble. Vestas is in trouble. Their margins are down so low with competition that they're having a lot of trouble. And so if you can go in there and cherry pick out an existing market and have a higher cost turbine, but the land is almost nothing, and your development costs are so low to redo an existing wind farm that you can then have a much more expensive piece of tech and have a much higher margin on that piece of tech. And it still works financially because your development and installation costs are so low.
How did you get into this? Did you mention?
Oh man, I was a river guide way long time ago, trying to save the Stanislaus River from the New Melones Dam, volunteering my time. And on one of these trips in 1981, a guy named George Wagner was on the trip, and we were talking about, oh, 3 Mile Island. Nuclear is bad. Oh, we knew about global warming. Coal was bad. There's no green energy solution except for hydroelectric power. And that meant we should dam every remaining river in the country. And if you're a river guide like me who loved rivers, that was bad news. And this guy, George Wagner, says, no, there's there's wind turbines. You can create energy out of wind turbines. And my partner, Bob Thomas, is the head of the wind program for the state of California. And they're bringing in tens of thousands of wind turbines into the state of California. And I was just tickled pink that there was some other solution for renewable energy besides damming rivers.
How long has your team been working together?
David Malcolm was on in 2015. Mark Chang was our electrical engineer. He was working on the 2012 and 2013 projects. Antonio, he came on in about 2014, working on the Denmark projects. And Jonet Montanu out of Belgium, he came on in 2013. He was the lead designer for the first cantilever turbine. Jeff Olson down in, he's been on for about 8, 9, 10 years with us. These are all part-time people, consultants. Ala has been on for a little over 2 years. And Omar down in Texas, he graduated from Texas A&M. He was an intern with us for a year, and then we hired him right after he graduated. So those two are the newest people on the team.
But if these are all part-time people, are you the only full-time person?
No, Ala's full-time, and Omar is full-time, and our accountant is full-time, and then we have a couple of part-time people helping with prospecting and investor relations.
If you've been working at it for so long and you got a massive offer for 51%, why are you not going to take that offer?
Well, in this case, to even get the offer, I had to tell them that I would take it, or they would not even have continued conversations with us. So we're now in the third level of conversations. And the reason is because they would be willing to license all the turbine patents and build out the market quickly. So the vision of our investors in the company has always been, here's this enormously unused resource. It needs to be redeveloped quickly. It's the low-hanging fruit in the world. To do that, we need to figure out how to get other players to come in and help develop it. So the patent idea is the way to do it. And the company we're talking to said that's right up their alley. They would not want to be a sole manufacturer trying to monopolize the market for themselves. They would prefer to go the licensing route, which works for us.
I mean, I think a strategic partner makes sense at your current stage, because if you're trying to access private capital at your stage, given your prior history, you have a big uphill battle when it comes to establishing a milestone before you can activate project finance and establishing credible milestones, because you can promise all these things, but again, about the history of credit and history of project finance is that they look at your past history instead of what you say will happen. And the past history has been.
Yeah, and what they look at is your first certified turbine, and then they're going to want to see data on it for, my gosh, maybe at least 6 turbines, maybe 100 turbines for at least a year. And then they're going to want an insurance wrap on that product before they will lend a customer $10 million to buy our turbines. So we're well aware of the uphill problem, but thankfully, that's where this B round capital comes in, and the ability to have a lot of projects in our pipeline. Like in Barbados, we have at least close to 50 megawatts of turbines in projects in our pipeline there.
How much of the company do you guys still own?
Oh, well, it depends on I mean, my family and friends and the
You
lead
and the
investor.
team.
For the Series A investor owns about 30%. And then my family owns around 15%. And then the other investors own the remaining.
But there's going to be another Series A investor who's going to be taking another 20%.
Yeah, something like that. Yep. And they'll take a board seat, and it'll be good. Good to have that level of increased knowledge on our board and that kind of capital coming in.
D, anything else from you?
No, I'm good.
Awesome.
So one last thing, we stay alive because of angel investors. While we are trying to find this lead investor and close this round, so we are always happy to bring in angel investors. They get notes that convert into the Series A shares. So people should contact me if they're interested in that.
And none of this is solicitation, folks, and none of this is sponsored by us, et cetera, et cetera. But if you want to learn more about 4WARD.VC and what we do, 4WARD.VC, we invest in companies that move the world forwards. Thanks, Kevin. Really hope you guys make it happen. It sounds very interesting. And if you need, some lending for sustainable decarbonization, sounds like it might be great for your clients. Brittany and Sadu can maybe help. Brittany, you want to take things away and share what you guys are doing?
Yes. 1 second. Start video.
And while you guys are listening to this, 4WARD.VC/Techies, we've got a community of 3,000 plus on WhatsApp and Slack. If you want to connect with others in the sector and the space that you guys are in and really network, find those JVs, clients, customers, employees, etc. Check it out. 4WARD.VC/Techies. Just be sure to put in your information and join.
Okay. Can anyone see anything? Because I cannot.
I see that Brittany Salas has started screen sharing. I just don't see Brittany Salas.
All right. Let's try and remove this background here. No.
Still nothing.
Okay. Removing virtual background. General video. All right, I'm going to refresh and come back because it appears that Zoom is not being my friend today.
No worries. I'll kick things over to Ines. I'm always getting a name wrong. Ines, do you want to share a little bit more about what you guys are doing with Biosorra?
Yeah, sure. I hope you hear me okay.
We hear you loud and clear. You are the center of attention. You got 5 minutes.
Super. So 1 second. Do you see my screen?
Yes, looks good. Seed round deck.
Perfect. Super. So I'm Ines, and my solution, Biosorra, helps address climate justice in Global South with this product that you see at the back screen, which is biochar. So our solution is backed up by the X Prize. We got initial funding from the X Prize Elon Musk Foundation, that is the biggest decarbonization competition. Then we are addressing carbon removal, and we've served today 1,000 plus farmers, and we have commitments to remove 6,000 tons of CO2 durably sequestered by the end of 2024. So essentially, we all know all the different issues about climate, but our focus is climate and food security. Due to the existing farming techniques, there's a vicious cycle of land degradation in yields grown per hectare that eventually leads to lower income for the farmers, having a really bad cycle of degradation, together with corporates with a huge need of compensating unavoidable CO2 emissions. It makes the problem interesting, having these corporates then compensating for the carbon removal credits. So our solution is transforming the carbon from agricultural waste that would be otherwise burned into a high permanence biochar, which is used as a soil amendment. When farmers use this, they can expect higher yields. We've seen up to 150% yield improvement. And when this happens, they, of course, increase their incomes. At the same time, we restore the climate with carbon credits. So this is a little bit of our process. Our modular hardtech unit that has been recently patented produces 650 tons of this measured product that is called biochar per year, removing 1,500 tons of CO2. and impacting thousands of farmers at higher profits and more foods. So for the farmers, the value proposition is a boost income. They save money because it's 1/3 of the fertilizer price and they last longer. It also provides higher foods, 40% is the average. Then for corporates willing to decarbonize the business, we provide climate justice credits and long-term quality assurance that is verified by a third party, Pure Earth. This is the internationalization looking like. So there's many countries as Kenya having the same issues and opportunities to expand and grow. And this is where we come from, where we go. We started last year with some discovery and R&D. We did validation with a small tech unit, then we scaled it up. We now produce it and patent it. We're not having the first commercial scale demonstration facility. And by 2027, we want to remove 1 gigaton net of CO2 out of the atmosphere with only 25 of these units, reaching 400,000 farmers and 30 million revenue. So this is the team. It's composed by myself and Carla. We met during the MBA last year when we came to Kenya with our business school. Then Anil, that is the PhD in biochar. We had Purity as head of farmers coming from another startup. Bella Culota, who's R&D from Professor Lehman. And then we are backed up by our universities and then, MIT Solve as one of the prizes for social impact. Now we're raising seeds. We are raising 3 million in grant and safe because it's too early. We have 325K committed, and the use of funds is going to be 1 million for R&D for a new product that we want to develop, 750 in biochar go-to markets, 250 improving the technology, and another 1 million for bringing in 3 more modular patented units. So,
1 minute warning.
Okay, I'm done.
I actually forgot to start the timer, so I was giving you extra time if you need it. But okay, perfect.
You didn't know what was the timing. Super.
Awesome. Great job on the presentation. While I'm bringing Dee back in, quick question. Everybody's doing biochar. What makes you guys special?
Yeah, everybody's doing biochar or wanting to do biochar is this mix that Kathleen Rapper always says between hype and hope. Where what we foresee as the major limit to scale is having a machine. And we've patented ours. So the lead times of existing machines in the market are 10 months a year. Ours, because we have the blueprints, can be done in like 1-2 months. So that's number one. Number two, this machine is 80% of the existing machines in the market. And the reason for that is because we made it simple enough that can process the wastes that we are targeting for, but also like complex to scale it up. And then number three, well, at the end of the day, the quality of the product comes down also to the raw material, and we are targeting to partner with existing corporations that produce major food exports. For example, right now we're with one that is producing coffee, rice, and macadamia. We've co-located in their facility 10 meters away. So this way it makes an asset-intensive carbon removal business a little bit more fast. And at the end of the day, still the market is big. So right now we're seeing new competitors coming in as key partners to educate the markets, because there's a lot of biochar needed in the world anyways. Sorry, because I was looking for our design.
What do you got, Dee?
Where do you make most of your money? Is it through selling carbon credits? Is it helping farmers improving yield? Which part of it?
So the carbon credits is the major source of income, and the game changer that we foresee in this is providing an affordable product to the farmers that make less than $2 per day, while making the most from corporates that need to compensate their CO2 emissions. That's the whole story of climate justice and our mission.
So who do you see as the primary buyers of biochar carbon credits?
Right now we have committed with 2 marketplaces that will take over the sales. However, we aim to sell them to big techs of the world. We are in a process with one, and it will make a lot of sense if we sell them to food producers like Nestle's, etc., because it goes more with the story of sustainable agriculture as fairs.
Have you talked to a lot of these multinational food companies, because they tend to buy these credits via the region that they're generated? So I'd love to hear more about how you interacted with their decision makers on that front.
Yeah, we've spoken with a couple of them, still in conversations, exploring what's the best way. However, we've seen another company that is more ready to commit, not in the food industry, and looking to get an offtake agreement to get started with them with one of the modular facilities, and then, yeah.
Can you help me understand how much energy is used in your pyrolysis process?
Yeah, sure. So our pyrolysis process produces biochar and clean energy, so we are reusing the gases. And we, in fact, have a surplus of energy that right now we're not commercializing, because this was a byproduct that we found. So yeah, we are reusing it. It's around 2,000 kilowatt per day in a conversion if we make this into electricity.
I'm sorry, I didn't catch that. When you say surplus, what do you mean here? Is it generated in the part of your production process?
Yeah, to make it simple, we're pitching our pyrolysis unit that is bringing biochar and carbon credits as a consequence. However, we have two more byproducts. One is bio oil and one is biogas. And this biogas is the energy that we are reusing to make our process more efficient.
Okay.
So a pyrolysis unit runs from self-generated energy.
And it sounds like, to me earlier, you said that you're looking to source directly from food manufacturers, like you're taking the waste off the production line. Is that correct?
Yeah, yeah.
So,
I mean,
yeah, please.
Go ahead.
No, please. You were going to say.
Yeah, there's so many reasons for that. We've done initial validation at a smaller scale, getting the waste from one farm to the other farm, and it gets complex when scaling up, and quality control and concentration, quantity, all of that. So this way we reduce that risk of scaling by having an anchor partner that has already a primary process of separating the food from the waste in a way, and then we get it from there.
I mean, it certainly gets away from the tricky question that you're kind of disturbing the nutrient cycle in the soil if you're sourcing the materials directly from the farms too. What does your solution look like at scale? Like, if you were to make this a massive success, what would that look like?
When you make this a massive success.
Yeah. When you make that. I'm sorry.
The question is when, right? In fact, like what we want to explore in this seed round is two different business models. One would be franchising, because like what we are seeing is that, a lot of people want to do it. Technology is an issue, how to do it is an issue, and we've gone through all of that learning. So franchising our technology could be an option to another food producer. And then leveraging, with the software and carbon credits aspect out of that. Or just partnering and having 25 of our units will move us to 1 gigaton of CO2 net removal. And for me, I would be done in life with that. That's already
what's your break even? What's your break even carbon credit price?
$150 per ton.
No, that's what you guys are charging. But what's like your break even? Like if it goes below that, the business doesn't work.
Good point. Below 100.
Okay, so if the carbon credit market doesn't stay pretty robust, you guys are going to have trouble then?
Yes and no. Yes, because right now it's set up that way, and no, because we are not commercializing two of our byproducts that could get us out of that way.
Have you looked at, I met another biochar company and we were kind of brainstorming a little bit, and possibly a much better model is just going to Microsoft or going to Pepsi or whoever it is, and then just letting them sponsor and put these devices in whatever communities you're putting them in, and then they're giving the communities essentially what they need to create their own businesses and to be self-powered and do all of this, and then you just give them all the PR they want, and that could be your business model right there. It's just XYZ kind of villages powered by Pepsi, powered by Microsoft, and they're making them self-sustainable, making it more sustainable, and making their business more sustainable in the process.
Yeah, I would love that. And for Microsoft, we need to get 30,000 tons. We're talking to them and see when we reach that threshold. But yeah, I think that would be, because there's no time and climate doesn't wait. That would be the best way to go, like getting all the finance up front and doing this at a bigger scale.
Yeah, even less as a carbon credits thing, and to more as a creating sustainable local kind of
supply chain,
and the ecosystems. Yeah. And then you could probably charge them a much bigger chunk than you would for a normal carbon credit projects, because now they're sponsoring entire villages. Yeah, there's just a lot more positive PR than instead of them signing off on some carbon credit thing that everyone else is doing as well.
Yeah. I mean, I would be super keen to explore that and make the numbers, see what makes sense. And no one is doing it, so
yeah. So you would stand out. Yeah. Just food for thought.
Super, thank you.
Anything else on your side, Dee?
No, I think that's about right. And yeah, I appreciate people going to the front lines, doing the work on the ground, trying to make these business models work. It's not very easy. It's
not very easy. That's very much true. So figure out a way to make it work and make it work at scale. Sound good? Inés?
Sounds good. Inés is fine.
Inés, okay. I'm terrible with names. I apologize. This one's a little bit easier though. Brittany with Sadu. Inés, thanks so much for presenting. Let me and us know if we can help at all. And if anyone else is out there and looking to pitch on one of these sessions in the future, the startuptank.com, be sure to apply. That'll also let you apply for our partner in Clime Accelerator. It's not your traditional accelerator of 10, 20, 30 companies, which hint means they're kind of indexing the market and care like 3 to 10% about you. We're super hands-on. We invest in 1 or 2 companies a month, and we become literally your partner in Clime, or your partner in crime, as we like to be called, but apparently it's a little too controversial. More details at 4WARD.VC. And now, last but certainly not least, Brittany with Sadu. You want to share? Let's see if this works this time.
Why am I having so much difficulty? I am selecting the 3 dots on the bottom right-hand corner that says more, and all
then share screen
is stop incoming video.
Huh. That's real strange. If you want, you can send over the present. If you give me a sec, I can pull up your presentation and put it on my screen. Yeah. Apologize for the technical difficulties, folks. We'll have things sorted out soon. If you need someone to blame Putin. He seems to be the one to blame these days.
Maybe blame Zoom here because they're failing.
Blame Zoom. Yeah. Let's see. Here we go. Pulling things up now on my side. Give me 1 sec to share my screen.
All right, I just sent the deck over email.
I got it here. Can everyone see that? Awesome. Then take it away and just say next when you want the next slide. Sound good?
All right. Okay, so thanks for the patience. I appreciate that. And for the attention after a few other startup pitches. My name is Brittany, and I'm the founder of Sadu. So Sadu itself is a lending platform for sustainability-linked bonds. So just to give a bit of background information, we know that companies need to report on emissions and will need to do so in the future. And we also know that this means they need to invest in carbon removal. And the carbon market is actually a great way of making this happen. So if you go to the next slide, please. But anyone who's been following the market knows that it's actually under a ton of criticism, despite the fact that it generated $84 billion in revenue in 2022 alone. This is, of course, a combination of the voluntary and compliance market. But this growth means that even with all of the criticism, new carbon credit marketplaces and project developers seem to be coming online almost every single week. If you could go to the next slide. And with that, we actually have a decrease in transparency in the market itself. So this means there's a lot of focus on exactly how these carbon credits or how the carbon is removed and how the project, let's say, landowner is doing the work to actually ensure that that carbon is removed. But there's little to no insight on the brokers and intermediaries in the middle. The process that they're going through to buy these credits, who they're selling them to, what their, let's say, profit margin is on that transaction. All of it is really creating a gap that has a lot of hesitancy by people who purchase carbon credits, such as corporates, to actually jump into the market. That gap in information subsequently results in a gap in financing for early stage carbon removal projects that is too small to be filled by banks, corporates, or even VC. So even considering all of this, let's say, chaos that has come about in the market lately, when we look at the regulatory pressure and proven climate-related financial risk, it should be clear that this market needs to be growing quickly and should be growing even faster. So if you could jump to the next slide. The solution is essentially to increase transparency by evaluating the integrity of marketplaces and project developers. This allows them to build trust with their clients and fund new carbon removal projects more quickly. If you go next slide, please. So Sadu does this by combining first and third-party data into an algorithm that rates the reliability of these developers. We then use this information on a lending platform that gives these developers the ability to finance new carbon removal projects. Next slide. So the business model is combined of transaction fees, and we're exploring an annual SaaS subscription to the ratings and research that is generated by the algorithm on the platform. And next slide. And we're looking at as I mentioned, massive market where we're actually looking at the sustainable finance market and targeting a SOM of project developers and marketplaces that are based out of Europe and the US. And we've identified about 183 just through different carbon credit, let's say carbon or climate tech groups that would allow us to go to market with that one-on-one relationship. Next slide. Yeah, and so what makes us different from an actual marketplace is that we are not focused on the individual landowners or the projects or the buying and selling of credits. What we're doing is funding the organizations who do that. These are the developers and the marketplaces. We're evaluating their business practices and essentially letting them leverage debt finance in order to sell more carbon credits. Next slide. So I think this is the wrong deck, but our team is made up myself. We actually have 2 developers on board now and a couple of advisors who have background in project development and credit ratings as well. And our developer comes from a background in finance, and another one who focuses on the front end, who also has a experience founding a company beforehand. And if you could go to the next slide. Yeah, so what's missing is our most important slide, which is traction, which I've been trying to get to. Excited to get to the whole time, but it's been in a different order. We have about 22 carbon credit brokers who are already committed to our early access program. And the way that we've brought them in is by making this research on the landscape of carbon credit brokers available to them. And we have about 2 partners that are currently committed to a pilot to actually issue finance. We're currently seeking different corporates who are interested in financing carbon removal without the risk of actually buying these forward carbon credits. And overall, like what we're really focused on is the need for early stage project finance for carbon removal. We've validated this by interviewing over 80 people across 2 months that are on every level of the value chain that involves buying credits, from CFOs to sustainability, like corporate sustainability, employers, not employers, but people who work at a company and do that. And of course, carbon credit marketplaces themselves. So,
and your time is up. How much are you guys raising? What are you looking for?
In terms of our asks, we just completed last cohort of ERA at NYC. We're raising 750 pre-seed starting in September. But right now, looking first and foremost for pilot partners to get our platform up and running in September.
Awesome. Very cool. Thank you so much for presenting. So that as you mentioned, there is a lot of controversy in the carbon markets and credits space. How does that affect you, and how do you guys deal with that when there is kind of an incentive to lie?
Yeah, I would not. What do you mean by incentive to lie?
I mean, one of the big problems I have with the carbon credit platforms is the platforms themselves are incentivized to approve product credits more quickly, because when they do, they get quick cash in. And now you're going to say yes, but they don't want to, but not if they want to stay around for a long time, because if they want to stay around for a long time, they have to have a good reputation. But some people will always just come in for fast money. So they come in for fast money, which is what we've seen quite frequently. And they kind of degrade the entire carbon credits market and experience, because you can always replace another Bitcoin scammer trying to get a quick hit of cash, so to speak. So how do you deal with that and bring that to a market that's inherently not all on the same team?
Yeah, I mean, there are three things that make this really different right now. One, obviously, we have regulatory pressure and demand for reporting on ESG commitments and a pushback against greenwashing. Two is the ability of technology to really aggregate and capture data at a level that's like never been seen before in human history. And three is then the ability to actually share this information according to individualized transactions. And if we look at that, it means it's possible to incorporate more data on carbon removal, prove where it came from, who did it, and how to each transaction. That has never been that hasn't been able to come to fruition in a platform at scale beforehand. So if I think about this, we look at companies like B0 who are doing a great job auditing projects at an individual basis to really understand whether or not they're actually doing what they say they're doing. On the other hand, we have companies like Watershed who are evaluating ESG commitments on behalf of corporates to really verify and understand where these carbon credits are coming from and whether or not they're committing to net zero goals. But what we don't have in the middle is exactly this problem that you mentioned, which is what's the transparency on the brokers or the exchanges or the developers who are just doing a quick flip of these carbon credits, maybe taking 80% of the profit for themselves, and nothing is actually going back to help remove carbon from the atmosphere. I mean, going back to these project developers. So this is the area that we're really focused on bringing more transparency to ensure that if that is a business model that is publicly it's just public information, and if someone wants to invest in a company like that, they're welcome to do so at their own risk. And I think likewise, I don't know if you can see this slide I actually figured out how to share my screen for the right pitch deck, because this is an important slide.
Got it.
Cool. So we can see we have at the very bottom of the stack of how a carbon credit is created and sold, we have the monitoring and verifications at the individual project level. Then you come up and you have solutions where they can audit what's happening there. These are the registries. And then on top of that, you have the marketplaces and project developers that are responsible for selling the credits. But where Sadu sits is very different, because we're essentially helping these marketplaces finance and invest into new carbon removal projects. So this is finance that is under $1 million in order to get a small scale project on board. And it's debt finance. And because of that, the project developer is still in the business of selling those carbon credits. That's their revenue, that's their generation stream. We use that to help evaluate the financial integrity of the investment into the marketplace or project developer. So I hope that answered the question. It was a very long answer.
Can you give scores to the different credit marketplaces that they can then integrate? So basically white labeled through an API onto their system so they can actually have that transparency there?
Yeah, so we're thinking about the scoring. I think there is some complexity there, and kind of from a regulatory perspective, if we're actually that platform in which the transaction is carried out for individual lenders to then invest or provide debt capital to these marketplaces, whether or not we're considered potentially a broker dealer or advisor, if we're actually providing that rating, or essentially if we're just providing a more transparent profile and research on these different marketplaces. So it's to be determined whether or not.
Gotcha. Usually is at this stage. D, take it away.
Yeah, Brittany, I think it's been about 1.5 years since we last spoke. So congratulations on your latest venture, which is a little different. Can you tell me a little bit more about the loan partners? Because I think you told me that 25 brokers on this platform. How are you getting access to loan facilities?
Yeah, this is what we're searching for at the moment. So right now we're looking for either accredited investors or corporates who essentially want to provide the debt capital to these marketplaces without the risk of having to buy forward credits from them. And there's actually a pretty unique instrument we're working with where essentially you have the option to invest in the project in the form of a convertible note, except as opposed to equity, you actually receive carbon credits based off a predetermined liquidity event. And so this will allow the company to essentially invest in a carbon removal project and call back the capital in terms of debt finance, or take the carbon credits because they know they need them for their ESG commitments that year. So it allows flexibility on both ends, one for the marketplace, two for the corporate.
Who do you picture as those people who will buy that, and at what rates do you think will convince them to jump in?
Yeah, so I think I just actually read something about Salesforce having a ecosystem restoration and climate fund that they've been deploying capital into. And so if they're looking specifically at more or less a higher risk carbon removal project, I would see them as being one of the, like in a perfect world, that use case of a potential lender to a project. We're also exploring the possibility of retail in the long run, but need to essentially test out the interest of specific retail investors before we go through that. And then on the other side for issuers, we're looking at everyone from individual marketplaces, let's say like Pachama, for instance, it's like not a partner at all, but just to give an example, or maybe even Shell, who is developing these nature-based carbon removal projects and need to be more public exactly about how they are using that project and those credits within their internal net zero commitments, and therefore can have lenders come in and finance that project. Yeah.
When you talk about carbon removal projects, a lot of the engineering solutions are so new that they're essentially doing MRV in-house, right? Charm being a very specific example. So where are you getting the data to assure loan providers or people who buy these sort of advanced carbon credits that, you know, this is past data telling you what it will be in the future? Yeah,
so say Charm Industrial has carbon credits that they've pre-sold to a marketplace. And this marketplace then does the job of selling these credits to a big, I don't know, Bank of America, to make sure that they're meeting their ESG commitments. What we're looking at is that marketplace and doing a one-on-one essentially interview with them to create a profile similar to what you would see when Republic lists a company for investments. All of the diligence and data that's provided there would essentially be available to the lenders, who then make an investment into the marketplace. And this way also—
reporting profile. I'm sorry. Based on reporting profile. Okay.
Yeah, exactly. And so the marketplace itself is then able to actually continue to generate revenue in the form of buying and selling these carbon credits, and likewise then pass that revenue on to the individual project, or maybe they've already made that forward purchase from this individual project. So this essentially creates a bigger window, or really addresses the gap in financing for small scale projects that larger corporates aren't willing to step in on. Because they need to purchase credits at a, you know, more or less a megaton scale. So oftentimes it's hard for small projects to get into the market in the first place. Same goes for larger banks. You look at private equity or even Bank of America with 300 billion that's been committed to sustainable finance, but they don't have the resource to go out and individually finance these small scale projects, maybe, you know, let's say 50 tons that are being generated. Yeah. Just like on an individual basis. So that's really the area or the hole that we're targeting and trying to fill.
And where are you getting your rake? Are you getting it from the buyers? Are you getting from the brokers or the project developers themselves?
Yeah, so it would be an origination fee from the developers. So it would be on the interest rate repayment 0.07%. Yeah. And then we're exploring a SaaS model for the research that would be generated on the platform, but we need to test that out.
That'd be challenging as well if you're then getting a take for, if you're recommending them and then also having a take for that and getting paid from them. It's a little bit complicated.
Yeah. I think that the data itself, I mean, the carbon market, there's a lot of need for information on how it works and who's doing what. So it could come from these marketplaces or potentially the investors or from different corporates. But we need to, I think, aggregate, first get to the point where we can enable these transactions. And then once we're able to aggregate enough data, we can test out the SaaS model.
If you fail, why will it be?
If we, I mean, I'm not failing, first off.
Oh, good answer. Someone's taking notes.
Definitely not. So I haven't really imagined any scenarios where that's a possibility. But essentially, next steps, like we have our MVP that will be ready in September. As I mentioned, we have a couple of pilot partners who are issuers. So they're giving us feedback on the level of data that they can provide, what a reasonable interest rate for them is, what that liquidity event is where they'd rather give up the carbon credits as opposed to pay back the capital that's been financed, and currently looking for, as I mentioned, a lender to help pilot with us. That is all going to take place in the next 3 months. And from there, the goal is really just to scale and bring more people onto the platform. Yeah, that's about it.
Okay. Well, very impressive. Good work. Any last questions from you, Dee, before we start to wrap things up?
No, that's all. Thank you very much.
Awesome. Thanks, Brittany. Thanks for sharing. Thanks, everyone, for coming and presenting. And now we move to the last and most and least important segment of the show, the climate startup of the night. We got to vote and see if we can get a little bit of consensus. Dee, since you're the guest and since gives me more time, I will let you go first. So who would you choose as your favorite company of the night? Who are the one or two you would most want to meet and maybe consider or set up meetings, etc. with?
Yeah. So I think something you said, I totally agree with. Probably the least important part of the night, because my opinion, investors' opinions vary. I want to stress this before the feedback fits everybody. When you have 100 investors will have different opinions on the same project, especially at the pre-seed stage. So a lot of my own perspective is not based on kind of what the general market, but what I see. Now, given that said, my proclamation is toward nTreaser, because I think the immediate application and the acceleration and the near-term impact is what's really attractive to me. Solar has been proven as a technology already. Obviously, it's not a science project. Well, but the deployment in developing countries, which is I see where most of the projects are being developed on its platforms, is still underrepresented compared to some of the more developed countries like California, where I live. So I appreciate the potential on that front.
Calling California a country. If you heard
something, I'm sorry. It will be soon, given how things are going.
Yeah, there's a good question. There's a very good case the U.S. should be multiple countries, but that's a whole nother podcast episode. So
yeah,
I think I can pretty much just agree. I would say nTreaser, in my opinion, is probably the best venture case here. Sadu definitely has a lot of potential as well. And I think there's a lot of potential with all of the companies here. You're all doing incredible things. But for us, that would be kind of the most interesting, or the one that was the best fit for what we do. I think everybody can do some pretty incredible stuff. Clearly, you guys all got on here, which means you beat out a lot of other folks. But for us, I would go with Miguel and nTreaser, and then hope that they partner up in some way with Matthias and Replace Energy and tackle the 1-2 punch of the entire energy infrastructure and project development. So everyone, thanks for pitching and presenting. You all did a great job. We've got all sorts of free stuff at 4WARD.VC if you're looking to connect with investors. We've got our climate VC database, 900 plus funds, incubators, accelerators, and CVCs. the nice thing, you can filter by stage, sector, geography, and check size. So you can actually find the right investor for you and whatever you're doing. Maybe that's D. Where can people find you?
Yeah, just head over to orcaclimate.fund. And yeah, feel free to contact and reach out to me directly on LinkedIn as well.
And if you guys are interested in us, 4WARD.VC for our partner in Clime Accelerator. Also be sure to join Climate Techies in our solutions database. We've got in Climate Techies about 3,000, in the solutions database 200 or so climate companies who are focused on getting exposure, getting customers, and changing the world. If you guys are doing that too, go over there, join them, and find a climate champion or crusader to help you out, and a partner network, etc. Because just getting rid of the inefficiencies is all we really have to do. We've got enough technology. If we could just get rid of the stupid paperwork and speed things up, we could fix these problems and get the right money to the right places. We could fix the problem. So get out there, quit listening to this, go fix the problem. And it's dinner time if you're in Europe. So bon appetit, folks. And thanks everyone for tuning in, and hit the subscribe button on YouTube or wherever you're listening or watching to make sure you don't miss a thing. Cheers.
Great. Thank you so much. Bye.